to the Canadian economy.
Yeah.
According to an article in the Financial Post, nothing but dead air stopping the Canadian dollar from hitting 68 cents US. The Canadian dollar plunged more than half a cent and fell back below 71 cents US after incoming US President Donald Trump said he will impose a 25% tariff on Canadian and Mexican imports over border and drug issues.
Yeah. So this came right after this tariff announcement.
Yeah.
So the dollar fell to like pre-pandemic lows. It came as low as 68 cents. I think it's trading at like 70 now, 71, something like that.
No, under 71. Yeah.
It's under 71?
Yeah. To put it into perspective, in 20 years, I think the dollar dropped below 70 cents twice. One was, like you said, in the pre-pandemic. One was like, I think in 2000.
It's been a decade, man, since it's been under 72 cents.
Yeah. And the lowest on record, I think, is 63 or 62 cents.
Yeah.
But outside of that, it dropping to 70 cents is a big deal.
Yeah. It's expected to hit 68 cents and could be even as low as 62. That's what some people are projecting, economists.
Well, if you look at interest rate divergence and where it's already at, right, and where it's headed, right, the Canadian dollar is going to continue to fall.
Yeah.
Right? Because the U.S., even though their unemployment in the U.S. went up, I think it was 4.1% in October. It's 4.2% in November. I think they were estimated to create 200,000 jobs, but they created 227,000 jobs. So projections are a little bit higher. Their economy's a little bit stronger. So they're not going to have jumbo rate cuts. They're not, right? But over here, unemployment.
Yeah, so there's three things that mainly drive the value of the dollar, right? That's unemployment, GDP, debt to income ratio. Unemployment is obviously coming down. It's at 6.8 now. It just came in.
It's going up.
Sorry. Yeah. Compared to the US, they're at 4.1. So there's divergence there. And even the GDP, Q3 GDP was 2.8 compared to Canada's 1%. And then debt to income ratio, they're at 180%. Canada is.
Well, Canada's debt to income ratio is...
It's more debt than income.
Yeah. I mean, even per household, you're going to have a lot of household debt because Canadian mortgages are massive.
Yeah.
Right? And a lot of the home prices here are pretty crazy, right? So with these bigger mortgages, you're going to run into a lot of problems, right? So even these high interest rates, they impact Canadians a lot more, right, than they do Americans, right? In America, what typically happens, you have 15-year, 30-year fixed rate mortgages, and you're kind of locked into that interest rate over that whole term, right? In Canada, we have mortgages that are 25, 30 years and they're fixed rate. Yeah, they're amortized over 30 years, but every 5 years you got to renegotiate, right? Whatever the interest rate is, right? So even those, you're vulnerable.
Yeah.
Right. So if interest rates stay sky high, you're going to impact a lot of the housing market, which is one of the biggest contributors to GDP. Right. So it kind of screws you in a lot of directions. Right.
And even foreign investment. Right. It's all going to be done in the States. Why would you invest in Canada at all?
Yeah. Which then is going to
have higher interest rates, higher returns.
Drive the bond market and then effectively affect the Canadian dollar. I mean, it's a slippery slope for Canada, especially with these tariffs. Like they can't afford this right now. Not right now.
So at the end of it all, what's the main impact, right? The dollar weakens, everything's going to get more expensive. And then that cost is going to get passed on to the consumer eventually, right? So it just makes the cost of living go up. Your dollar's not going to go anywhere. There goes like shopping in the States too. There's no point at all.
I mean, not only shopping in the States, a lot of these American products that are imported here, just because you're not buying them from the States, a lot of these companies are American, right? So when you buy these products, they're going to be more expensive.
Yeah.
Right. And then like, if you're traveling to the States, you're going to feel this. Right. Like it's a lot of people, it's going to be harder for them. They just don't know it yet. Right.
And naturally, like inflation is going to climb back up too.
Especially if this keeps happening. I think inflation is not going to climb as quickly as people think it is, unless something drastic like 25% tariffs. Then obviously, because they'd have to decrease interest rates right back to almost 0% very quickly.
Exactly.
Right. Which would impact everything. Right. But the Canadian economy today, I feel like because of the jobs report, I think because unemployment is at 6.8%, last time I read, that's around 1.5 million Canadians are unemployed. right? I think around 87,000 new people are unemployed. So, I mean, to me, I just see this heading into tomorrow's interest rate announcement,
Yeah.
right? I don't see them making anything less than a 50 basis point rate cut, and I wouldn't be surprised if it was 75.
I mean, yeah, unemployment keeps going up. Job growth is stagnant.
Mm-hmm.
So it's like for the Bank of Canada, it's like rock hard place. Bank of Canada.
Mm-hmm.
Like you're kind of stuck.
Mm-hmm.
I feel like they were too slow to react in increasing and too slow to react in decreasing. They could have got ahead of the curve a bit.
Yeah.
Right.
Yeah. Even when they were decreasing them, I feel like they gave warnings 2 months ahead of time.
Yeah.
And
when before they didn't have to give the warning. They could have just started decreasing. It would have had more of an impact. Right.
And even then you had a lot of economists saying, oh, they're going to do quarter point at a time. And they started doing 1 point decreases, increases, right? 1 point, 1 point, which kind of just decimated the economy.
Yeah.
Right. And so.
Yeah, it hurt.
Yeah. Right. Everybody. Yeah.
I mean, now there's all these outside pressures, right? It's like they don't want to lower it. They don't want that much divergence. But then there's the threat of these tariffs. There's the dollar weakening. It's like you lose when your only control is interest rates for monetary policy. You're stuck now. And what do you really do? You have to lower it. If you don't have any option, unemployment keeps going up, right?
Well, the dangerous part of it is inflation's really not a problem right now, right?
If at the same time, because of these outside pressures, inflation continues to go up.
I don't think it will. Like to what they could, right? To your argument. But I feel like if you look at the housing market now, like I was randomly looking the other day, I think a lot of these homes are selling for under asking. Not just like these big storylines that you read. If you just go look at sold homes, you'll see a lot of them are selling for under asking in pretty much every neighborhood.
Yeah.
Right. So that's with this idea that interest rates are going to be decreasing by 0.5 point tomorrow, right? Or 0.75. That's what everyone's expecting. Even with that, you have houses going under asking, right?
Yeah.
So I don't think if interest rates come down like another 1.25, right? I don't think that's going to affect the housing market like crazy. I don't think it's going to drive.
I feel like these guys are going to lower it, and then they're just hoping and praying that the U.S. will do the same because you don't want to get too far away.
Well, unemployment, like I said, went up by 0.1% in the States. It's at 4.2%, right, in November, right? Which the U.S. has historically, their unemployment is nowhere near like Canada's, right? Like their economy's always been stronger, right? And then when you look at job growth there, like I think it's pointing to, I don't think because unemployment ticked a little bit higher, I think the Fed is going to cut rates, but I feel like it's going to be a 1/4 point.
Exactly.
Right. So, and if Canada cuts rates at 0.5 basis point or 75, right, then interest rate divergence continues to grow, right?
Yeah.
So that dollar is definitely going to get weaker. You can't stop it at this point.
Exactly.
But
and they kind of did it to themselves, right?
But if you're thinking about a country, your own country, I think maybe you can't worry about interest rate divergence and the Canadian dollar before you worry about your country's economy, right? Like if people can't afford their life, I don't know if you're like, no, the Canadian dollar is getting too weak, we can't cut interest rates.
Yeah. Well, we'll see what happens tomorrow.
Definitely. Let's move on to something a little bit more fun.